Good morning, traders. This is Brad Matheny. This is what is this? The 12th of August. Boy, I had to look. Long weekend, guys. You had a good weekend. Nice to be with family and to settle down. Had been running around for the last week and a half, taking care of things, but all is good. Okay, so where do we stand today? Now, if you follow my research and have been following my research, you know that I am expecting a vortex rally. So let me add this into here. I am expecting a vortex rally to set up over the next many months. So understand that I am not talking about, I am really not talking about a vortex rally lasting, 3 days or 5 days or 10 days. I'm talking about a vortex rally that's going to last potentially 24 to 36 plus months. And you can see that I've drawn the vortex rally here in these big red lines that carry forward over here. So understand that I'm kind of expecting this move to take place over the next 24 to 36 months. And in reality, if we come over here to a monthly chart, I can tell you that we're really talking about, a move ultimately targeting way up here as we blip up into this 14, 15,000 area that I think could be a very definable move. Okay, try this one again. And the reason why I believe this is capable is very simple. We have a Elliott wave count that to me looks like a very solid move from this area here as a wave 4 pullback starting a wave 5 rally. I still believe we're in wave 1 of wave 5, meaning that we have an A, meaning 1, 2, 3, 4, 5 potential rally before we're going to reach a peak. Secondarily, I think the Fed's going to continue to manage rates and growth over the next 4 to 5 years relatively efficiently. I can't imagine that we're going to have a big meltdown unless World War III sets up, and then we'll see what happens. But I think the conflicts that are going on right now in the Middle East are fairly isolated, and believe it or not, I think they're going to end fairly quickly. I think that once that area of the world realizes that picking a fight versus settling into some sort of peaceful solution, coexistent solution, I think they're going to figure that out over the next 12 months. And possibly when we get a new president here in the United States, they may come a little quicker. So I think we're going to see this vortex rally kind of build shape. And that's what I'm basing a lot of my analysis on related to the markets. We have, again, I can show you data point after data point about how the US dollar is strengthening. We're in an upward trend. I've highlighted these channels here, which were, just off of these channels and just off of this high channel. We need to get back above this dotted line channel here on the SPY or on the SPX 500. I think we're going to move back up into these new all-time highs before the end of the year if we continue to defend this level. So right now, I'll try to draw this. We have to defend this level. It is very important that the SPY continues to stay above this level here, which is, call it 5260, 5,260. And it is critical that we defend that level to the upside, in my opinion, manage into some sort of a flagging formation. You can see I've drawn various flags here in yellow, and then this sideways flag potentially in blue. So I'm looking at these flag setups, trying to see if price is going to fall into any of these boundaries. Right now, we're in a bit of a recovery. The S&P is up 0.37%. The SPX 500 probably going to open a little bit higher. The SPY cycle patterns are indicating a gap breakaway. Okay, so in a trending mode. Trend is obviously bullish after we've seen this deep bottom and rally back up. So a gap breakaway may indicate a fairly large bar. I'm trying to be cautious here. I would not be betting the farm on anything, as I indicated in yesterday's video. Now is the time to stay very cautious in the market. We could, and I do expect price to attempt to move down throughout the next probably 5-10 days, retest support here around 5290, 5300. If we look at the SPY, same type of setup is applying. Yeah, I know I have a lot of data here, but let me get rid of some of these things. Get rid of that. Get rid of that. Get rid of that. Spread this out a little bit. And really, we have the same setup. Okay, we need to protect this level here. I'll highlight it again by drawing. So we need to protect this lower level. It's very, very important that we protect this level here on the SPY, and that is 523.70 roughly. So that is our critical protection level. We need to stay above that level in order to see continued upward trending. As you can see, I've drawn here a rolling pattern that I think is more likely to take place, rallying up to this support level here, coming down through this flagging channel, maybe moving into a tight 3 to 5 day type of a flag pattern before we get into some breakout. Now, I will tell you again that we must, let me see where that one is. Okay, we will eventually attempt to rally above this level here and attempt to rally above this level here, which is acting as a ceiling. So now understand that these upper levels that we're getting to are just like ladder runs. We are staging higher. That's what we are doing, staging upward through this trend. We need to defend this lower level here, make this a dark red. We need to defend this lower level here. Price must stay away, meaning above that level, in order to potentially continue to rally. We will likely move into a flagging formation here before breaking to the upside. I do believe that this 543, 544 area will end up being a temporary ceiling. And then I do believe we'll run into some resistance here at 552, 553. Then we will break away and attempt to move to the upside. Will we get any consolidation before the election? Well, we could. I'm not going to argue that we shouldn't. What I'm going to tell you is that this is not like any other election we've had. We have never had a presidential candidate drop out 4.5 months or so prior to the election like Biden did. It's going to create a whole new dynamic. And I think that new dynamic is going to essentially be a wave of excitement that's going to persist into into a rally phase. And let me try redraw this, because I really do think we're going to likely move up into a new high category, maybe into this 560, 580 area, and then maybe roll a little bit before the election before moving higher. And that is a more suitable type of a roll, in my opinion. Oops. This not so much. So understand that we're kind of looking, here's the election. I think we get to new highs probably by mid-end September, and then we may roll downward as, so to say, the dirt slings, with the election being only 20, 30 days away. And then as we start to get some clarity moving into the election, I think we're going to see a pretty solid rally. And again, the Vortex Rally, as I talked to you guys about, look here, the Vortex Rally is auto scale, shrink. We're really looking at these, where are they? There they are. These types of areas as the Vortex Rally. So what I'm looking for is more of a parabolic move. In fact, let me, yeah, the 900-pound gorilla is the U.S. stock market. A parabolic move, and you can see these levels here. Something kind of like this. And I will modify this just a bit, get rid of this, modify this. And what we're really looking at here is, you see how this parabolic move kind of mirrors this dashed line channel. So pay attention to these orange dashed lines, which I'm bringing to the front. These are very strong trending indicators going back to October 2023 low. So if we were to open this up and come over here and highlight this, Control C, Control V, and create an outlier off of the recent lows, pretty much there. That gives us the breadth of the channel as we move into a more aggressive channel upward. So it gives you an idea of, if we recover and if we continue to rally, if we stay within these channels, this lower channel here, maybe I should make this a little bit lighter color. If we stay above that lower channel and continue to rally into this cycle, we're going to stay right within my light cyan color, light sky blue color Vortex Rally channel through all of 2025, pretty much into maybe 2020, early 2026, and then begin to accelerate higher. And this is why I keep warning everyone that the SPY and the NASDAQ and the Dow, I mean, they have a very strong potential to double, maybe even triple in price as we go forward. We're getting into a very explosive move that I think is going to last all the way out into 2028, 2029, 2030. So be aware that, volatility is going to be king. The U.S. market is the 900-pound gorilla, and global markets are going to be struggling to try to defend currency and keep up with potential growth factors in the U.S. economy as a whole. I think that it's going to be a very strong 6, 7, 8 years probably before we reach a peak area in like 2030, 2031, 2032. So as we move forward here, we'll see how this plays out. Let's take a look real quick at gold. Gold is moving higher. You can see it here. Try to move the gold price data to the front. Now, I did indicate that I thought that gold would move into a flagging formation here. You can see it. Drag this over here. Drag this over here. So I do really believe that gold, after getting up here like we are right now, 2480, 2490, I think gold's going to settle into a sideways flagging formation right here. I think you need to be aware that gold is going to do one of two things. It's either, and this is what price always does, it's either going to flag out or it's going to continue trending. Trending would mean that we're shooting up for that 2550 level. Let me try to shrink this and indicate to you that if we move into trending, if we break away from this flagging formation, gold will try to make an almost immediate move up into this 2550 area, maybe over the next 7 to 10 days. And then we will likely see a stalling pattern, bringing them back down into this middle channel area, possibly back into this flagging area. Remember, these are my flags. Try to make these a little brighter, I guess. Not too bright, so I'll make these a little bright. And I would very strongly suggest that gold is going to continue to flag out. So if you look here at the flag, you can see that we've rallied up, come back down. There's our flag, rallied up, come back down. This is our breakaway phase. So breaking away up into 2550 and moving into that channel is perfect. It's a great setup right now. But once we reach that 2550 and I get rid of some of these other lines, understand that there's a very real potential that once we hit that 2550 area or a little higher, maybe up in this 2580, we're going to be within these channels again. And it's very likely that this new move, this new peak, is going to come back down into or around this area because of the flagging formation and the downward channel. And this will set up a new potential flag, setting up like this, potentially like this, and potentially like this, assuming we get to around 2,500. And we're going to have a new flagging setup drifting higher. And this is very common. Okay, now we are near the, not quite yet, but we're getting close to the upper area of the breakaway. The upper area of the breakaway really is up into this 2690, 2700 area. And we could very well move right up into that area and then consolidate back down before we break out. So understand that we could ultimately get to this level, 2700, and visual order bring to front. And then we could roll. And I do expect us to likely roll back down here before setting up some bigger move up into the expansion phase. So we've got a lot of opportunity here, guys, for gold. I mean, a good solid rally phase up to 2,500, which is about a $76 move, then a potential stalling, then a move potentially up into the 2660, 2680 area. That's $180 from where we are now. Then we consolidate back over here into the 2560, 2570 area. Then we make the very big move into the expansion phase right over here. This is the expansion phase. And that big move is going to be basically from this low, an aggressive move up here about $1,000. And it's going to be coming probably near, well, it could happen into, it could happen in December, late November, December, it could start of this year, making a big move. And this would probably be tied to the new president, the new POTUS, and new policy. But I'm going to just guess that somewhere between November of 2024 and January, February of 2025, we could be moving into this big $1,000 move, 40% move up in gold, targeting 36, 37, 3,800 or higher. Okay. And lastly, let's go to Bitcoin. Bitcoin's been a little bit all over the place. Really was deeper over the last night. You can see here running right back down. These are the levels I highlighted in my weekend video. We must defend these levels. This is roughly a 382 level and a 50 level on Fibonacci. Actually, the 50 level is probably a little lower. 382 level is probably a little lower based on this low here up to this high. We are defending. We are looking for rejection. We're getting rejection right now. We do need to see Bitcoin attempt to move back up into the flagging sideways pattern. That would put us at around 61, 62,000. We're not that far away right now. And I do believe Bitcoin's going to find support, going to flag out over a period of time, possibly melting upward a bit like this into a rising flagging formation. And I think we are going to be looking at a very good opportunity for Bitcoin to move back up into the 72, 73, maybe $76,000 area by maybe before the end of October August and into early September. Okay, so there is your pretty much. Let's take a quick look at IWM. I know that people have been asking about this. Channeling upwards still looks like a good opportunity back at 211, 212, as long as we stay within this channel. Remember, we could move back down in this flagging formation. And remember, you do want to pay attention to this big move here. We basically have a 50% level here. We have a 382 level roughly right about here. These are areas that you're going to want to pay attention to. They're Fibonacci levels. I talk about these all the time in my videos. This is how I see price in Fibonacci structure. You also have the same 50% level roughly right here, a little wider. And again, you have maybe right there, and then you have the 382 level down here. So we want to see these levels defended. And we want to see these levels held. These are critical to determine real price support. So you can see we've got to get above this level as a rally phase, and we've got to defend this level as a rally phase upward. Ideally, the way Fibonacci works is it must attempt new highs or new lows. So as long as we're getting new higher highs moving upward, we are attempting to breach these levels going higher. If this fails and starts to break down, particularly this area here, this 202, 203 area, then we would be looking for a potential downward channel, retesting some lower support. So good to see this moving upward. We'll see how it plays out. And then the QQQs, basically same setup, guys, trending upward. Remember, we have lots of drawing on here, trying to get rid of them. Okay, we have an upward channel setting up. We still have those same basic Fibonacci levels, 50% of this range to this range. I can draw it pretty much right here. Sorry, should have been a horizontal line. 382% of this level should have been about right here. Qs are already above the downward 382 level, which is a good sign. We have this move here to here. We want to be defending the 50% level, which is roughly here. That should be in a darker green. And we want to also be defending the 382 level, which is there roughly. And so this gives you an idea of the Qs are attempting to move back into upward trending fairly aggressively. We're back into that bearish 382 level. We're trying to rally. We need to get above 545, roughly 35. Then we can see some sort of an upward base build, trying to maybe make a move back up into this area, which is 576.21. Again, it's all Fibonacci, guys. Everything I'm teaching you is about Fibonacci and simple price structures that tell us that price must always attempt new highs or new lows. So given where we're at today, 51 up in this area, if we get a solid rally, we could close this gap on the Qs, and that would be very positive. So if we get a rally above 457, 456.50, 457, then that could be really positive for an explosive rally phase back up in the markets. Okay, guys, remember, plan your trade, stay cautious. This is not the time to be betting the farm right now. This is really stay cautious. The market could move down and try to attempt a lower low, setting up a fifth wave. So be aware. We need to stay very cautious right now until the market defends these lower levels efficiently and builds into an upward trend. There'll be a great big sweet spot right up in this area here, right in this area. There'll be a great big sweet spot for traders to make a ton of money. You just want to make sure that we're capable of getting there first. Okay, talk to you guys later.